Well, when you understand what inflation is, it's pretty clear who benefits. So first of all, inflation transfers wealth from creditors to debtors. Because if you borrow money and then there's a lot of inflation, when you pay back the money you borrowed, it is less valuable than the money that you borrowed. So if you could borrow money, for example, and use it to buy a piece of real estate, and then there's a lot of inflation and the value of that money goes down, when you pay off the mortgage, the lender is not getting returned to him money that has the same purchasing power as it was when he loaned it to you. So that lender loses and the borrower wins at the lender's expense because he gets the benefit of using the loan to buy a real asset that holds its value and then repays the loan in money that has lost its value. And so let's say there's hyperinflation or very, very high inflation. If I borrow, say $500,000 to buy a house, and then there's hyperinflation, and you need $500,000 to buy a pack of chewing gum. What is the lender getting back for the money that he loaned me? He loaned me enough money to buy a house, and all I'm doing is giving him back enough money to buy a pack of gum, right? So it's the lender that loses. And if you look at who is the biggest, debtor in the world, it's the US government. The US government has a national debt of almost $30 trillion. And so if there's 10% inflation, that knocks $3 trillion off the debt, right? So the government wins. Who loses? The bondholders, the people that bought US treasuries or anybody that holds US dollars, they suffer that loss that the government gains. But the government also has all sorts of ways that it benefits from inflation. Inflation creates phony gains that they tax, right? People have appreciation in their assets. The government taxes it, but it's not real appreciation, it's dollar depreciation. Also, Social Security is indexed to inflation. And to the extent that they lie about inflation and then they don't have to increase Social Security as much, that's a way to reduce Social Security benefits without voting to cut them. And that's what they want to do. They want to cut benefits without having to be on record as voting for the cut. So inflation benefits the government in all sorts of ways. And of course, when the Federal Reserve monetizes the debt, creates inflation by printing money, they're buying US treasuries. They're monetizing the debt. They're making it easier for the government to finance its debts. And by artificially limiting interest rates, because that's what inflation does, the Fed is printing money and buying bonds to keep interest rates down. That enables the government to continue to service its debt. Because if interest rates were allowed to go up, the government would have to default.
Sounds like a big chess game.
The next question, actually, Julie, this is a good one for you.
About the top.
Yeah, this one right there.
So can inflation lead to deflation, or are prices / values resetting to, you just did that, to what they used to be, I think is what it said.
Yeah.
What happens does it stop? Do the prices keep there and then they level out and they stay high? Because we hear all the time, they're saying, well, it's a bubble and all bubbles pop and prices are going to come down. We just have to wait it out. What happens at the peak? Does it stay high, or what causes it to deflate?
Well, there is a cycle, and inflation could lead to deflation. Deflation could lead to inflation, depending on how the Federal Reserve reacts. So if the Federal Reserve reacts to inflation with aggressive rate hikes, and contracts the money supply, which is what it should do, we will have a deflation. My concern is the Fed won't do that. And in fact, any sign of deflation is immediately met with inflation, because the government is so scared of deflation. Even if we get close to it, even if we just get lower inflation, not actual deflation, but if the inflation rate gets too low, the government panics because they're so worried that we might get deflation that they preemptively create even more inflation to try to prevent that from happening. But if we did have a big deflation, what would the government do? They'd print a bunch of money. They'd slash interest rates. So any deflation automatically leads to a surge in inflation. But whether inflation will eventually produce another round of deflation depends on what the Federal Reserve does. Again, I think at this point, the stakes are too high, and they've already staked out their position. Really, they're staying at zero. They're not going anywhere. And if inflation gets worse, well, they're just going to pretend it's not a problem. They're going to pretend it's transitory. Then they'll pretend it's a good thing. But the only thing they won't do is fight it, because they can't. I mean, if the Fed could actually fight inflation, they'd be doing it right now. It's already bad enough that they should be doing something. The reason that they're not is because they can't, but they can't admit that. So they're pretending they will if inflation ever became a problem, even though it's already a huge problem right now.
Wow. It's a lot to understand. So we have thousands of people all over the world listening, a lot of them, of course, here in the US, but most are in the residential real estate business. What should they be doing to position themselves for what you feel is coming next with this discussion? What should the real estate investor, the real estate practitioner, what do you feel is a good thing for them to be doing right now?
Well, I think you should have property that has a good cash flow, have good tenants. I think you should try to have debt on the portfolio, especially if you can lock it in at a low rate for a long period of time, because I think you may end up making more money as a debtor than as a real estate owner. But also understand, where your property is and what the dynamics are, because there are going to be properties that suffer, and there's going to be properties that do well in the economic environment that I see coming. If you have rental property, obviously the real value of the property is a function of what the rental market is like. And if you're in an economy where you have very high inflation, it's going to be hard to pass on the rents, because people need to pay money for food, they need to pay money for a lot of other things. There may not be much left over for rent. And of course, what you have to realize is that demand for housing could, or rather supply can increase rather rapidly in depressed situations, because everybody who owns a home can potentially start renting out rooms, right? So I need extra money. I can't afford to pay, my food or my electricity. I'm going to rent out one of my bedrooms. Now, all of a sudden, there's more supply coming out of the single family housing. Also, a lot of people that live by themselves, I'm going to get a roommate. And so people are doubling up. You might find more families doubling up, sharing the same residence. So all of a sudden, you've got a lot of supply, because people's standard of living is falling, and they're trying to accommodate by reducing their costs. And so that could make certain types of real estate in certain areas more vulnerable, because if the property is just sitting empty and you're not getting any cash flow, meanwhile, inflation is increasing the cost of maintaining the properties, governments are increasing taxes on the properties, there could be a lot of problems. On the other hand, I think there's a lot of parts of the world where you're going to see strengthening currencies, rising real incomes, where real estate prices are doing really well. Because when you look at currency as kind of like a zero-sum game or a seesaw, as the dollar loses value, other currencies gain the purchasing power that the dollar loses. So Americans become poorer, other people become richer. And as those people become richer, they can afford to pay higher rents. They can afford more housing. And so it's going to be a mixed picture depending on where you own this property, what's going to happen to it. And certainly even in America, there'll be certain areas that can do well in this environment where others won't. So, you just got to be careful. And I think you got to look at prices and valuations. I think some of these markets where prices are very, very high, and clearly you're talking about bubble territory, there is a lot of risk. But if you're looking at buying in areas where, you could buy real estate where it's arguably cheaper to buy than build. I mean, there are plenty of places that you could buy property where it's less than it would cost you to build something comparable. In some cases, it's like you get the land for free because the construction costs right now are so high, and they're going to get higher. And it's not only the material costs that are high, it's the labor costs. So as it costs more and more to build new homes, the homes that are already here are that much more valuable because they don't have the competition from the new homes that are being built, because they're not being built because it's too expensive, or they can't even do it because the materials and the labor are not even available.
You
Well, so how long do you think this current inflationary cycle is going to last? How would we know? How do you know? What do you look for in terms of it maturing or moderating? What is your expectation for this cycle?
I think it's going to be a long time. I don't know, when there will be the political wherewithal to do something about it. I mean, I think it's going to have to get really horrific. But I do think that they're going to try a lot of crazy things first, like price controls. We did that in the 1970s. It didn't work. And in fact, the inflation is already worse now than it was back then when we tried it. But I think we're going to try it again.
Can you tell me what that is? Peter, can you tell me what price controls are?
Well, that's when the government makes it illegal to raise prices, right? They basically fix prices. They say they go after the symptom and not the disease, right? Because if they keep printing money, they keep creating inflation. And if they try to limit price increases, it's not going to stop it. Because what happens then is that you have shortages, right? So yes, the price doesn't go up, but what good does that do you if you can't buy the good? The good isn't there. And the way you ration the goods, because in a free market, we ration goods on price. So if there's a short supply, a lot of demand, price goes up. And then some people won't buy it because it becomes too expensive, right? And so there's always a balance between supply and demand. But if the government stops the price from going up, right, and they keep printing money, demand skyrockets, but supply doesn't go up, you have a huge shortage. And so how do you decide who gets the product? Well, you have a long line, right? You wait online, for hours and hours in order to get the product. So if you're not willing to wait online, you're not going to get it. Now, some wealthier people will pay people to wait online for them to get the products. But there are other ways of, distributing the goods other than rationing them through price. But what ends up happening, though, when you have price controls, apart from companies finding ways to get around it, like they'll come up with a brand new product that is different from the other products, so it's not technically subject to the price control. But you end up with black markets, right? You end up with goods being available illegally, by criminals who will sell them at a higher price that's against the law. But if you want to buy this stuff, that's how you buy it, right? You buy it illegally on the black market. And so that's what price controls produce is black markets. But, shortages, rationing. I mean, one thing with power, right? If the government puts a control on power, we're going to have rolling blackouts. We're going to have to share the power, and everybody's going to have to take turns, having no power, as opposed to letting the price go up and letting people adjust their behavior accordingly, where people just stop using power who can't, pay the price, or people will be more economic. I mean, that's why you remember the long lines for gas in the 1970s. That's because they were controlling the prices. If they just let the prices go up, there wouldn't have been long lines, right? Just like, in the US, every time there's a natural disaster, the government wants to go after somebody for price gouging if they charge too much. But that's a mistake, because you actually want the price gouging, because it's the best way to ration the goods and also eliminate the supply shortage. Because if the price goes way up, then supply will come in from other areas of the country to meet that price, and ultimately the price will come back down. But when you stop the market from sending these signals, then the shortage gets worse, and the ultimate upward pressure on prices gets worse.